Welcome back to QAV. This is episode 432. TK, I am out of lockdown. 8 days in and out. That's how we do it in the big red state. Is that what we are? Reds? Are we the Reds?
Yeah.
I don't know.
Well, you're meant to be.
Right, I don't follow it. Commies. Yeah, we're the big commie pinko state. How's it going down there in Sydney?
Well, I've had my second jab today, so hopefully I can move around a bit more and feel comfortable with it all.
We need to get this show done and dusted before you fall over with side effects again.
Yeah, quite possibly, but we'll see.
I hope not. Well, as I said to you off air, I had a hell of a day on the old stock market, Tony, but I'll get into my complaints later. Let's start with things you have to talk about. What is this great rotation business, Tony?
Got a lot. Well, we've had a lot of questions about commodity prices and whether they're in sell territory and the rest. So I just wanted to spend a bit of time going through my notes. I spent a fair bit of time yesterday looking at it all. And I agree with a lot of the comments coming through on the Facebook page and in our questions that, yeah, things are turning down. Let me start with Santos, which is, I think, in our dummy portfolio. I own it. It's been on the top scorers list for a while. And as we mentioned, I think last week or the week before, it's announced a merger with Oil Search, which is another oil company. And the share price has gone down since then. So I think Santos is probably qualifying as a sell on bad news. And it's not necessarily bad news, but it's news affecting the share price. So let me just sort of work through my thinking on that. The first thing is that it's not a sell from a 3-point trend line point of view unless you fudge it. So the share price graph for Santos has a couple of big dips, one of them being the COVID cough last year. And you can draw a line extending between those two and it gets a sell price which is way south of where the current share price is now. And you could fudge it and take L1 as being the COVID cough, and then you're getting a line that goes up much steeper, and it's a sell on that fudge line. So just my thoughts on that. The slope, if you use the traditional 3-point trend line, is about 13%. And we've been talking about having 8% as the cutoff before we do a fudge. So, you know, the 8% is not really anything, not really hard science. It's more statistical. That's the best. That was the optimal performance when Dylan did some back testing. But who's to say whether there aren't any outliers and 13% is wrong or right in this case, and whether we shouldn't be using the fudge line. So that's the first comment I'll make. If you want to use the fudge line, then Santos is a sell. And it's only not a sell if you stick to the hard 8% rule on flat bottoms and not sort of go to, say, something like 13%. But put that aside for the moment. What's happening with Santos? It wants to merge with Oil Search. One question that begs is, what will the merged company look like from a QAV score point of view? And the Santos QAV score at the moment, I'll just look it up. I did a download yesterday, being Sunday, the 8th. Santos is currently not even on our top scorers list, so it's dropped off. And it has a QAV score of 0.06. That's what I'm getting anyway. So if you look at that, if you look at what the Oil Search QAV score is, and Oil Search is even worse than Santos, its QAV score is 0.01. It's pretty hard to me to see that a merged company is going to be on our top scorers list. And probably, you know, somewhere as an average between those two scores, 0.01 and 0.06. So that's another potential reason to sell. And then I guess the third one is that, again, news related, the PNG government came out over the weekend and Oil Search is based in PNG. Santos isn't. But the PNG government will have to give its assent before the merger can go ahead. And some of the things that they're likely to demand before they give their assent is that the Santos head office is in PNG, or at least the big office is in PNG, and that they employ a certain number of locals and support the economy. Much the same sort of conditions they put on Oil Search operating in PNG as a foreign company. So it's possible to see that the merger that's currently being looked at gets diluted a little bit because there are conditions placed on it by the PNG government. And it's also fair to say, I think, that this is the merger's just been announced and that there may have to be other sweeteners put in by Santos to get the approval of the Oil Search shareholders across the line, because the merger has to be approved by both groups of shareholders. So I think just on the news factor alone and the fact that the share price has retreated since the merger's been announced, it's really a sell-on bad news type story. It's not necessarily bad news. It's going to create a large oil company which will be a powerhouse in the region, but not necessarily a good one from a QAV point of view. So I've been watching the share price. It's come down. It's potentially bouncing around the bottom now from that overhang of news, but it wouldn't take much in terms of the offer having to be raised by Santos or conditions being placed on it by the PNG government to see the price take another step down. So I'm going to sell my shares. I think I put out an announcement this morning that I was thinking about it. I'll wait 24 hours, and I think we should take it out of the dummy portfolio as well on that basis.
So this is, even though, I mean, we normally don't sell things just because they fall off the QAV list, the scorecard, right? And it's up roughly 40% in the dummy portfolio since we added it. So it's been a good one for us. And it's not, there's no really bad news, not like there was with GLE this morning, which we'll get to. So this is sort of what? I mean, it's like I'm not sure how do I turn this into a guideline for people?
A rule? Well, yeah. I think it is very much news related. It's news of a merger. Oftentimes the acquiring company, and this is not really an acquiring situation, it's more a merger. Oftentimes the acquiring company is the one that does worse out of it in terms of share price. It's usually the acquired company which goes up in terms of its share price in the short term. So I think that's a news event. It sent the share price down, so it's not like a CFO resigning or a CEO resigning or something like that, but it is, and it's probably potentially long-term good news for Santos, but it's got a long way to play out, and it's going to be, I think the share price will move around according to what conditions they have to give up to get the merger across. And look, the other thing too about companies falling off the top scorers list, that usually happens because their share price goes up. So their price to operating cash flow goes down. And then we use the 3-point trend line to sell them. This is, like I said, a fudge 3-point sell. If you want to stick out for a non-fudge 3-point trend line sell, then no, it's a hold. But I just can't see this. I can't see anything that's going to re-rate the Santos share price. The oil price, underlying oil price, is coming close to a 3-point sell. So if we have a look at that, it's a couple of bucks off a sell. I'll just go into Stock Doctor now and have a look at oil using the commodities section. Oil's down 1.2% overnight. That is West Texas Crude, and I prefer to use Brent, but we'll look at them both. So we're starting with West Texas Crude, which is the US oil price. It's currently $68. My 3-point sell price for it is around 62. So that's $6 off that one. And then if I look at Brent, again, Stock Doctor's giving me a US Brent number, but anyway, we use it. It's a fair way off if I use Brent Crude North America. I can't see where I've got let me just see if I can find the Brent Crude not by North America. Crude oil, here we go.
You're doing this in Stock Doctor?
Yeah, so I'm going in. Okay, so what I just did then was I opened up the commodities advanced graphing screen.
Yeah.
And over in the top left-hand side, you can enter code or name.
Yeah.
So I put in oil, and then there's a subheading, and I clicked on commodities.
Oh, I see.
Yeah, so I'm going to go down and look at CL hash, which is the crude oil futures current.
Yep.
And if I draw a 3-point trend line on that, the sell price is telling me it's about 65.50, and the current futures contract price is 68.28. So it's getting pretty close. It's just a question of which one you use. So if you wanted to stick out Santos and see if the oil price turns up again, fine. Or watch the commodities charts and see if they cross, fine. But I'm happy to fudge it based on the fact that there's also news in there.
Right.
Which isn't necessarily, I don't think it's a positive for the stock, put it that way.
Right.
And it certainly caused the stock price to go down.
Yeah. Okay.
3-point trend lines, they're all about de-risking. It's trying to stay safe in the market, really.
Yeah.
So am I worried about missing out on the next, 10% from Santos going up versus saving myself 20% downside if it goes down, which it's kind of all leading towards. If I take all those things together, then I'm prepared to de-risk and sell Santos.
Right. A little bit of forecasting in there, Tony?
Yep. A little bit. Not really. It's forecasting in terms of what will happen with the share price because of the merger. So there's a bit of forecasting in that. It's getting close to a sell in terms of the crude oil futures, so there's a little bit of forecasting in that. And it's a fudge on the 3-point trend line, which I'm, maybe forecasting with, but that's not really forecasting. That's just taking a fudge, which I think is fine, especially with commodities. We've seen the leg up in the oil price. It's all happened since the COVID cough. Prior to the COVID cough, the low point for oil was $45 compared to in the COVID cough when it got down to about 19.
Mm.
So and it's gone up from 19 to 68. So it's that's in fact at the high point it was what was that 73. So it's more than tripled since the COVID cough. So it's taking a profit too.
Right. Okay. That's something we normally don't do though. And what happens if the oil price turns around? I mean, it looks like it's sort of been up as high as it's ever been in the last 5 years here, so I can't see it turning around and going too much higher, I guess. But yeah, and there is a lot of talk around that. Again, that would be me forecasting, but there's pressure on OPEC to keep the price around $70 a barrel, so it may stay there. And one of the things that happens with oil is that once it starts to get to the top end of its range, more producers are invited back into the shale oil gas market in the US. And so you have wells which have been sitting idle for the last year or two will open up again. And if the US starts to produce shale oil in sort of volumes, because they need sort of maybe $70 a barrel to make money, then there's more. They import less from OPEC, and that sort of the price tends to equalise around this sort of level. Right.
But again, that's just my sort of knowledge of the oil market. But it's just everything about this at the moment. I'm particularly using the 3-point trend line fudge and the fact that the Oil Search merger has depressed the Santos share price as reasons to sell. Now, what could go against that? Well, if the Oil Search merger gets pulled off the table, the Santos share price could rise. So there's that risk.
Right. Okay, so we're going to get rid of it out of the QAV portfolio and you're going to sell your own holdings.
Correct, yep.
All right.
And I think in terms of the dummy portfolio, we'll talk about it during the pulled pork section, but I'm going to suggest we buy ZGL, which is now the highest on the...
Zycom.
Zycom.
Doesn't have an average daily trade of like 3K?
4K.
4K?
Yeah.
That not too small?
Well, our position in Santos in the dummy portfolio is $1,500, so
right.
Yeah, potentially. It's a little bit small.
After getting burnt by GLE this morning, that's that scares me. But at least it's only the dummy portfolio. It's not my real money this time. Anyway, okay, ZGL. There you go.
Yeah,
good.
There you go.
Do you want to talk about more of these stocks? What's going on with the others?
I do, because we still got iron ore to talk about. There's been a few questions come in about it. And again, I'm going to suggest that I'm going to sell my iron ore stocks, and I own Fortescue Metals Group, which is my biggest portfolio position, and I own Champion Iron, which is a big position for me as well. So I've got to figure out how to do this without crunching the price, and I'll probably do it as a dollar cost average over a few days for those stocks, and then try and find something else to buy that I don't already own and isn't iron ore stocks, because obviously the next big stock that I don't own on the top scorers list is Rio Tinto, which is another iron ore stock, so I don't want to expose myself to that. Okay, so what's my feelings about iron ore? Let's have a look at that commodity graph. Stock Doctor Iron Ore, and the iron ore price has risen a little bit overnight. Click on commodities first, and then you get iron ore, and then click on advanced charting. I'm using TR hash, which is iron ore 62% pure, 62% iron, CFR China TSI it's called. So 3-point trend line sell for iron ore is again much lower than the current price. So the current price is $172. I think that's per ton. The current 3-point sell price is $78. If I draw a line using our 3-point trend line algorithm, that's a big fall if we want to wait until the iron ore gets to that price. So again, I'm looking at a fudge line, starting with a low point of April 2020, and then drawing a line up there which touches November 2020, and then the current share price graph has just crossed beneath that sell line. Now, my reason behind doing that, Cam, is that, again, a bit like oil, since the COVID cough, when the iron ore price was $83 per ton, it got up as high as, well, on a monthly basis, $214, but I know intramonth it got up to being $240. So, again, the price has tripled. And in the last month, it's dropped from 211 back to 172. So quite a big drop. Now, what's behind that? And again, this is, I guess, provided for context rather than for prediction. And there's a whole heap of issues here. So China is trying to talk the price of iron ore down. It's called jawboning. So they don't like paying record prices for iron ore, and they particularly don't like doing it because it's an Australian resource which they're buying, and there are political issues around the relationship between Australia and China at the moment, and the Chinese Communist Party has been saying things like, well, we want to get our climate change numbers down, and so we're going to put a clamp on iron ore production for a while, or steel production for a while, And so people are forecasting what that might mean, and that's depressed the predicted volume and then therefore the price of iron ore. However, in the background of that is the fact that the Biden infrastructure bill is being passed in the US Senate. That will probably go ahead, and that'll be a lot of money being put into steel production in the US to build things. And on top of that, Vale, which is the big competitor for BHP, Rio and Fortescue Metals Group, is having more and more problems with its iron ore mines and shipping from Brazil. So there's no sort of volume coming into the market, at least in the short term, which will get the price down through natural supply and demand from the demand side. So it's possible that if China is just jawboning to get the price down, the price will rise from here. So I'd probably want to watch it for a few days and see what it does, but it has crossed over a fudge line sell at the moment. On top of all that, what other sort of important things are there to consider? The next results from Fortescue Metals Group are probably going to be really good. I'll pick FMG as being the biggest iron ore stock in our portfolio. And you can see that if you go into Stock Doctor, you can have a look at what the forecast operating cash flow is going to be. So if you go into Stock Doctor for Fortescue Metals Group and then go into the financial metrics and go into the financial metrics tab, you can see about the third line down under the subheading solvency, the December 20 number was $3.43 a share for operating cash flow. The projected June 21 number is $5.19.
Wow.
So you'd expect there to be a big increase in the operating cash flow. Now, that's a projection, that's a consensus number. But given the fact that we've had our last quarterly report from Fortescue and we're days, if not maybe a week or so away from their results, it's probably a pretty safe bet. Fortescue may come in and surprise on the upside. I wouldn't expect them to surprise on the downside. If you plug that number into the checklist, then FMG is going to improve in terms of its QAV number. It's currently, my checklist has a QAV score of 16.16. And, given that the operating cash flow is going to go up by about 30%, that's probably going to be in the 20s, in the 0.2s after we get the new numbers. Now, isn't that a good thing? You might say, well, it is, except that it's that number, and particularly for commodity-based stocks, for miners, is that number's the rear view mirror. That's saying to me they've had a good 12 months. It's not necessarily saying they'll have a good 12 months going forward or as good a 12 months going forward. And again, this is prediction, but if you have a look at the June 22 forecast, it's for a lower number of $4.81. Still higher than where we are now, but $4.81 of operating cash. So there's all sorts of numbers being used as assumptions in those forecasts. So I treat the June 22 number with a grain of salt. But it is hard to see how in 2 years' time the iron ore price is going to get to a record high again. You would need to have full-on steel production around the world, which is what people have predicted when we come out of COVID. And you would need to have the competitors like Vale still having problems getting any sort of, big demand into the market to bring the price down. Both of those two things, I don't want to forecast. Both of those two things, though, are potentially hard to see happening. So anyway, I think the iron ore price is a watch at the moment, and I think if it goes anywhere lower, then the iron ore stocks are a sell, Fortescue and CIA. And if you look at the Fortescue share price, it's already down from $25 odd to $22.74 today. So that the iron ore price is having an effect. And if you look at Champion Iron, CIA, which is another one that's that I own. I think it's in the dummy portfolio. You might know, Cam, is CIA in the dummy portfolio? I can look it up, I guess.
No, it's not.
It's not, okay. So it's just me then. But that Champion Iron's down 4% today, and it's dropping fast as well. So I'm putting it on notice. I'm going to start lightening out of these companies. I probably won't sell all at once unless I wake up tomorrow and find out the iron ore prices drop down again. My gut feel is that it's not going to go much lower, but my gut feel is also it's not going to go much higher. So we're going to sit here for a while. And again, this is a situation where we've made such great money out of FMG that it's taking some profits off the table as well. And the same with Champion Iron. What are we giving up? Well, there's a big dividend coming from Fortescue Metals in, 5 weeks' time? I think it's mid-September that it comes in. I'll just confirm that. I'll go back into FMG. Ex-dividend for FMG is 10th of September, so 32 days away.
So you need to hold the stock on the 10th of September in order to get that dividend.
Correct. But that dividend, currently the shares are trading on a 10.7% yield. So, I expect as soon as it goes ex-dividend, the share price will take another leg down by a couple of bucks. So that's an issue too, although, over time it recovers. And that might be a buying opportunity if we see that after selling it we want to buy it back. But, we'll see. Again, I'm using a fudge line for the commodity price, and I'm going to start selling, especially if it drops further. Now, FMG has a double position in the dummy portfolio, and there's about 5,000. Last time I looked, it was $5,500 worth in the portfolio. So we need to replace it with two stocks, I think, half each. And I'm going to suggest HUM and IMA are the two stocks. We probably should keep a look at HUM because it's getting close to its sell line as well. It's bouncing around. You're laughing about HUM. Have you sold some?
I sold both of those recently. I sold HUM like about a week ago. I sold IMA at the end of the financial year. But yeah, I sold HUM recently after it went backwards on me.
Yeah, it's been dancing around that sell line. I'm just going to have a look at IMA. What's the sell price for IMA?
I don't know, but I did a scorecard this morning. Neither of those are in my top 10.
Really?
Yeah.
I did one yesterday, and they're both way up in my top 10. I've got Zycom, Medusa, Cash Converters, IGL, HUM, CAA.
Well, let me no. I mean, I've got IGL at the top of mine.
IGL or ZGL?
IGL. ZGL I took out because the ADT was too small for me.
Oh, okay.
Right.
Yep, sure.
When I do the sell line for HUM, I think it's right on the sell line now.
Yeah, it's been dancing around. I'm getting a sell price for HUM of 94 cents and the current price is 96.
95 according to Stock Doctor right now, but yeah, my Stock Doctor anyway.
Let me have a look. Well, we might be buying and selling it quickly, but you're right, 95. I just refreshed.
Yeah, and I mean, I'm just drawing a line. I'm not putting it into the 3-point calculator, but I'm getting a sell line of 94.9 cents, and it's currently 95 cents. So I don't know, man. I probably wouldn't have that on my buy list. It's a bit dicey for my liking.
Yeah, it's also in a bit of a downtrend as well. So, yep, let's skip over it then.
And IMA, let me have a look at IMA. I did check this one late last week, but because I sold it recently, I didn't want to buy it again because you warned me, things you sell on the last day of the financial year, you shouldn't buy back too quickly or it'll look like you're trying to scam something.
Yeah, capital gains tax.
Well, I think IMA is a Josephine too.
What's a Josephine?
Oh, Tony, this is my new terminology. You haven't caught up with the Josephine? We haven't talked about it on the show. I think I've used it in emails and on Facebook. This is wait and see. It's like not tonight, Josephine. You said a couple of weeks ago if something's above its buy line and above its sell line, but it's currently in a downtrend.
Yeah.
Then it's a wait and see, which I call a Josephine. I call it a Josephine because it's not tonight, Josephine, which I can tell you there's no record that Napoleon ever actually said that, but it's good enough. And it's sexier than just a wait. So I'm talking about IMA, though. IMA finished July at 1908. It's currently at 18.5. So
hang on, I've got IMA on the way up. Let me just have a look. It is currently at 18.5. No, yeah, it's dropped down a bit. Okay. Yeah, it's in the downturn. You're right. It's above its sell price, though. But it's in the downturn. So let's skip it.
That's a Josephine.
A Josephine.
Yeah.
I like Robin Williams as it's a Nefertiti. Not tonight. I'm having my pyramid.
What was that in?
One of his stand-up acts.
Right. Oh, okay. Great. Yeah, sorry to put the kibosh on those, but...
That's fine.
And I tell you, when I was doing my checklist today, it was brutal because nearly everything I looked at was a Josephine. Everything had been retreating for the last month or two.
And that's a bit of another worry in the market, isn't it, at the moment?
I don't know. Is it? Is that a worry? Isn't that just
if you can't
business as usual? Oh, I eventually could, but it took me a long time. Reg, one of our members here in Brisbane, Reg called me up early today and he goes, I'm just doing a checklist. Do I need to do my manual data? There's like 80 stocks in it. Do I need to do all the manual data on these 80 stocks? And I explained, well, I normally just do the top 20 or 30, depending on how many stocks I need to buy. And I said, I've got to buy 2 today. So, it shouldn't be a very long exercise for me to go through and, just check sentiment. Normally I find that when I check the sentiment, about half disappear immediately, but half are still there. But then I got off the phone with him and I was checking the sentiment and everything was just nope. I was like, oh my God, I was really getting that. Like in my top 10, ING is number 10, and I've got a QAV score for it of 0.12. Normally, I don't go below two for stuff. I had to really scrape the bottom of the barrel to get a list of 10.
Yeah, right.
Tough.
Well, I'm just working through my list at the moment. It looks like KSC is the next one that is above its buy line, above its sell line, and has had an upward trend this month.
KSC, they're not on my list.
It's small. It's like another $4,000.
Oh, well, that'd be
ADT
why.
stock as well. It's K&S Corporation. It's a transport company based in Adelaide.
Right. Okay.
So let's put that one in.
We're going to replace FMG with some KSC, and then we need another one.
Yep. So KSC, half with KSC. Let me keep going. Oh, and by the way, in terms of what I'll buy when I get out of FMG, unless something pops up during the next week or so with company reporting season, I'm just going to have to top up my current holdings.
Right.
Because I pretty much bought into every big company on the top scorers list now.
Right.
Okay, so what are we looking at? Next one on my checklist to check out is Beacon Minerals. Is that one you're familiar with?
Yeah, I think I put the kibosh on those last week. BCN, right?
Yeah,
I didn't
BCN.
check them today, but I did a list on Friday when I had to buy something, and yeah, that's a Josephine as well. It's been coming back since May.
Yeah, no, you're right.
And it's actually below its sell line now too, I think.
Oh, is it? Let me have a look. Yeah, it could be. It's one of those. It's a very low volume ADT again, so the graph is a bit sort of. I think it's crossed its sell line too. You're right. Should take it off the checklist. I'm just going to do that now on mine.
Yeah, in fact, it crossed its sell line back in March, I think.
Mm-hmm. Okay, we've got the next one down as Eclipse Group we already have. Choice Corporation's the next one down. It's too small. It's only got 3,000. ADT. Kings Rose Mine. Do we have KRM? What?
I bought them on Friday and they dropped by 10% this morning. So I axed them this morning, which is a question that I want to talk to you about at some stage. Like, I was a little bit confused thinking about this over the weekend. I got an email from somebody, I can't remember who it was, might have been Ed or something like that, about Rule 1. But King Rose Mining, by the way, is another Josephine.
Okay.
Like you've said, when we talked about Rule 1 last week, you said if you bought something and then it quickly dropped by 5 to 10%, you would sell it, invoke rule number 1. But previously, Ed reminded me, you had said that when you buy something, you don't look at it for a month. So which of those?
This is like the life of Brian, isn't it? He shed it's a sandal. It's a holy sandal. We should all take our sandal off.
What is
the rule about sandals, oh Lord?
It's this is your life. It's like we'll bring out one guest and go, well, Tony once said this, and then the next guest will say, well, actually, he told me the complete opposite. So, well, no, look, and I think they're both sensible, but I'm wondering which one takes precedence. So I've been worried then, like when because after you told me this last week, I've sold like a whole bunch of stocks last week that I'd bought that had dropped by 5%. But then when Ed, or whoever it was, I think it was Ed, reminded me of this, I was like, oh, shit, well, should I just ignore it for a month and then look at it? I don't know.
Okay, so the background to Rule 1 for me was about 10 years into my investing career. We were refinancing our home mortgage, and we had a private banker, and she came to the house, and we signed up the documents and had a cup of coffee, and we talked about what I was going to do with the money, which was to invest in the share market. And of course, the private banker, apart from giving us really good service, was also there to try and sell us other products, other bank products. And so she said, oh, did you know we can offer you a solution to stop your share portfolio from dropping more than 10%? Would that be of interest? I said, oh, yeah, well, tell me more. So she went and got the guy who does that to come in and take me through it. Basically, there's a thing called cuff and collars, which are basically options that, you know, you put all these puts and calls into the market. And
I went to a nightclub once where there was cuffs and collars involved. But,
as long as I
think there was quite a few bankers there as well, actually, and a big bowl of cocaine in the middle of the room. But anyway, sorry, yeah, go back to your story.
The cuff and collar, that used to be the name of the restaurant at the G-Bung Polo Club in Melbourne in Hawthorne.
Right.
On Auburn Road. We used to go there a lot.
I met my first wife at the G-Bung.
Yeah, good pub.
Yeah, well, didn't work out very well for me, but yeah. We didn't have any cuffs and collars involved, but anyway. Yeah.
Anyway, so basically, long story short, they would put a whole series of options into the market, into the portfolio based on the shares I held, and yeah, it wouldn't drop more than 10%. The portfolio wouldn't drop more than 10%. So I said, how much is this going to cost me? And they said, well, 10%. So it was, I thought, well, hang on. If I just put a stop loss in for all my shares at 10%, aren't I doing the same thing for free? So that's where Rule 1 sort of came to be 10%.
Right.
Yeah. And that's sort of what I've used. In terms of not looking at stocks after I buy them, I don't. But having said that, you do find out if something is dropping either through reading or the AFR. If it comes up on the daily charts on the AFR of the stocks that have gone up the much or dropped the most, you can see it that way. And these days, I guess it's coming up in the Facebook group as well that people are saying, what do I do? So I probably do find out about it quicker than I would normally.
When I buy something now, I set a price alert in Stock Doctor for 5% less than what I paid for it, my buy price. Mm-hmm. And they will send me emails, unfortunately, way more often than I intended in the last couple of weeks. So should I do that or not do that? Should I give it a month?
Do it.
Or do it. Okay.
Do it, yeah. Well, especially, look, I would use 10%. I said 5 to 10% last week, and if you're sort of setting an alert at 5%, at least you'll know and you can watch it and see if it gets much below that.
Right.
Yeah, but I've always used 10%.
10%, okay.
Yeah, and I don't watch stocks. I mean, I forgot. I traded out of the Macquarie Group last week and bought Suncorp, and I completely forgotten I did that until I was going through the portfolio on the weekend saying, how much is FMG in the portfolio and how much CIA do I have and what do I have to buy and what do I currently... And I went, oh, that's Suncorp. Yeah, I forgot I own that one already. So.
And didn't they just announce today the big dividend? So I saw somebody on Facebook. Yeah.
Cool.
Posted that. All right.
Yeah, so that's that.
How are we going for time here, Tony? We're 41 minutes in. We haven't found a second stock to replace FMG with yet, though.
All right, let me just keep looking.
I tell you what I've got at the top of my list, which is IGL, 0.41, COG, 0.22, Mastermind Group at 0.21, Australian Vintage, 0.20, and Midway Limited at 0.18.
I have none of those. I have IGL. What was the other one after? So let's look at IGL then. Is that in the... I think that's in our dummy portfolio already, Cam.
Yeah, let me check.
It is, yeah. So we don't want that. Right. What was your next one?
No, it's in my portfolio. COG, C-O-G, COG Financial.
Why is that ringing a bell? Oh, yeah. I've got it in mind, but it's down the list a bit.
Right.
So I have a QAV score of 0.28 for it. What do you have?
0.22, and it's number 2 on my list. Yeah. And I already own it, by the way, just as a full disclosure. Not that anyone cares what I own.
We don't have it in the dummy portfolio.
Right.
So I was going to look at, I've got 2 before COG on my list, Motorcycle Holdings and Myer Holdings.
I own both of those in my own portfolio. Or at least I did. I know I still own Myer. I may have sold MTO because I think MTO
touched its sell line recently, I think, didn't it?
I think so, and I may have sold it then.
Let me have a look at the current.
Well, let me...
Yeah, you must have sold it because it's up 1.38% today.
Yeah, I'd say it's maybe just above its sell line now, but it was below it, yeah.
I think it's okay to buy. Let's put MTO in the portfolio.
Right. Okay, so MTO.
So that's our 2 stocks for FMG. Do we have any? I think we have GRR, don't we, in the dummy portfolio, another iron ore stock?
I think we do, yeah.
So we have to replace that.
Yes, we do. It's up 187% since we bought it.
Mm-hmm.
And mostly like just this financial year, I think.
Okay. That's right. I had a good announcement a couple of weeks ago, didn't it?
Yeah, now we're going to sell it. It's cruel.
We are.
Brutal. You're brutal today, Tony.
I'm fudging the iron ore price. So we need, so next one on my list is Myer.
Yeah.
And we know that that's in an uptrend.
Yeah, I think Myer is still holding strong. It's dipped a little bit, but I don't think it's, well, it's a Josephine, actually.
Has it dropped in the last month, has it?
Yeah, end of July at 49.6 cents. It's currently, hold on, no, that's not right. What's going on?
Down 3% today.
Finished, sorry, Stock Doctor was just catching up. Yeah, finished July 49.5 cents. It's currently 47.5 cents.
Okay, let's keep going. So COG is my next one, which is your next one. Let's see what COG is like.
COG is great. Look at that chart. Oh, it's a Viagra chart, that one.
Yep. Okay, let's put COG in.
COG. All right.
Just let me check its 3-point sell line because it is slowing down a bit.
Oh, it's got plenty of room.
No, it's well above it. That's fine.
Yeah,
yep.
yeah.
Okay, so GRR goes out, COG goes in.
All right.
We don't have COG already in the Novexa portfolio, do we?
No, we don't have COG.
Okay. So what else I want to say? No, that's probably it. The only other consideration for me is I'm going to have a big capital gains tax bill.
Yeah.
By selling FMG and CIA, which the dummy portfolio doesn't. So that's a benefit for the dummy portfolio, but I'm going to have to manage that myself going forward.
Right.
Yeah.
Or you just, so you, like some of the money that you'd get from the sale, you put aside for it, or what do you do?
No, I don't. I can always sell something when the tax return is due. Right. And that's a fair way away because if you use a tax accountant to do your tax, you don't have to pay it for about 18 months after the end of the financial year. So we're talking nearly 2.5 years away before I have to pay CGT on FMG.
And you know, as we've talked about before, because of your portfolio doubles every 3 years, 18 months is a half a doubling. I think you'll be all right.
Yeah, I think so too.
I think you'll be able to cover it.
Someone else has asked, I can always sell my Aurelia shares and I've got a loss up against the FMG shares.
I was telling Taylor that story today because we couldn't get out of GLE, which is, can I talk about that for a second? My woes. So woke up this morning and, sometime this morning, 9:30 or 10 o'clock, got an email from Stock Doctor or someone, Hot Copper, maybe, I think it was, saying GLE had announced that their CFO had resigned effective immediately. Resigned today, leaving today, out the door. You're gone. Don't pack a box. Don't collect your goods. Didn't say that, but it just said she was effective immediately. And so I emailed you, and then I emailed Taylor and said, this is not a good sign. And we're already dodgy about GLE, and we decided to sell. So Taylor and I both bought our shares through Superhero.
Yep.
And it had a very low ADT. I think it was like $3,000. And we sort of had not paid attention to that when we bought it 6 weeks ago in the flurry of things I was doing with the boys. And immediately after we bought, I noticed it and I went, oh shit. Oh, well, we're in now. Let's see where it goes. And then it went up, if you remember, by like 12% one day, and then it went down 15% the next day. So anyway, we tried to log on to Superhero to sell our stocks. This is about 10:35 this morning. And Superhero's website wasn't working properly. It was not coming up. Both Taylor at his place on the app and me on the website of my place couldn't get it to fully load. It was like half load and the site wouldn't load, and we're hitting refresh. Finally, I got it to load and I put through a sell order for GLE. It said it had received the order and it was pending. A few minutes later, I'd say 3 minutes later, I got a text message from Superhero saying that the sell order failed. And I was like, what the? And so I went back to their website, and again, it was sort of not really loading. Refresh. Managed to put through another sell order, which went through. They sold most of my holding, but not all of it. There's 250 shares remaining, which I didn't find out for several hours because I had to run out the door to go to the blood bank. Anyway, in the 5 or 10 minutes between me putting in the sell order that failed, then redoing it, and then them selling it, the share price dropped by about 20%. Because we got in, before, I can see the price drop on Stock Doctor in their daily, charts. We put it in before it dropped, and then it dropped, and they didn't get me even all the way out at the end. So I also sold Kingrose Mining around about the same time. It went through okay, but I've emailed I contacted the Superhero people on Facebook initially and said, what's going on with your website today? They said, send us an email, which I did. So I've sent them an email and say, look, this is terrible. Your site wasn't working properly. And as it wasn't working, it's cost me money because the sell didn't go through. And then you didn't even sell my whole parcel. There's still stock outstanding. In their site, it says review. If I go to my transaction history, it says review. When I click on review, it just gives me an option to cancel the order. It doesn't tell me why. Doesn't tell me what else to do. So I said to them, look, I can't use or tell people about your site if this is what's going on. So I'm not using Superhero anymore. Unfortunately, one of the things I liked about Superhero is when you transfer funds into it, they use OSCO. So the funds transfer is immediate. I went back to SelfWealth and tried to transfer funds into my SelfWealth account, and it's going to take 3 days for the money to hit their bank account, so it says. So I did a checklist, and it was a hard one because of all the sentiments. So I spent an hour or so doing the checklist, and then I couldn't buy anything because I can't get money and I don't want to use Superhero. So I was like, what?
Gosh.
And the Kingrose Mining thing, as I said before, I bought it on Friday. And I don't know why. I'm looking at the chart, and it was a Josephine already by Friday, so I don't know why I bought it on Friday. I mustn't have checked the chart close enough. But, yeah, it dropped 10% this morning, so I dumped that as well. But, it was, good learning opportunity for myself as to, I don't know, using some of these new apps that then crash. And what can happen when a stock's in free fall and your broker's website's not working?
So what kind of sell order did you put in? At market or at
market?
Price? Or?
No, at market.
Okay.
Yeah.
So that last bit of your share sale should have gone through.
You would think, unless nobody's buying.
Well, yeah, that's possible in a thinly traded stock. But
Taylor was able to sell his stock.
ASX put the brakes on.
Well, maybe. Taylor was able to sell his stock and his mate Chris sold his all around about the same time. I don't know, man, but not good.
It was nice if you'd let them go first.
Yeah, well, I emailed Taylor and he immediately FaceTimed me and said, what do we do? And I said, well, let Chris know. I think we should get out, let Chris know.
Right.
And then it dropped through the roof. I don't know. I mean, it may have come back with a bit of luck. It's come back up and, I made a profit on that stock that they didn't sell. But I don't like my chances.
Doesn't usually work that way.
No, it's down 18.57% since this morning. So there you go.
Bugger.
Anyway, good learning experience for me, Tony, of all those things, as I said. Cameron in the editing room late on Tuesday afternoon, the 10th of August. So 24 hours after we recorded this episode and 36 hours, give or take. Well, maybe not quite that, 30 hours after this whole debacle happened. I did get an email back from the superhero folks last night basically saying, oh, yeah, sorry, the site had some problems, but we fixed it fairly quickly. To make up for your problems, we're willing to offer you 2 free trades. Now a trade on superhero is $5. So they're offering me $10 in compensation. And I said to them, $10, that doesn't even begin to cover the losses I made or I incurred because your site was down. And they still haven't replied to me about what happened with the parcel of shares that didn't get sold. It's still sitting in pending a day and a half later, and they haven't replied to my email. So, yeah, I'm moving all my stuff off of Superhero and going back to Self-Wealth. So that's my 2 cents on that. So
I want to keep talking about some of the commodity price charts just quickly.
Sure.
To round off that.
Yeah.
And I'm just going to call out that copper is close to a sell. So if you want to have a quick look at that. And that will affect C6C in the dummy portfolio. And I also have Samphire, which is a copper stock in my own portfolio, so it will affect that. So if I go back into Stock Doctor into the commodities section, copper's down 0.5% today.
Now, copper's the problem one, isn't it? Copper's the one where we need to look at the something underscore.
If we use futures, we're a bit off the sell price. So the HG hash, which is copper futures, that price is 4,300 or $4.32 a tonne, is it? Yeah. And the 3-point sell line is $3.75, so that's a bit off. But if we look at the copper price itself, physical price, so again I type copper into that search window, hit commodities, and then we have XCU underscore, which is copper physical.
Yeah, that's the one.
And then that's pretty close to its sell, so
yeah.
This must be again a price per tonne. 9,500 is the current price, and it's got a sell of around 9,300. So pretty close.
9,443 I'm getting.
What have I got?
Even closer. Again, I'm just eyeballing it.
Yeah, I'm getting 932, but yeah, it's close.
Okay, we're not. Are we? Because the low is actually back in August 2016, but is that within 8% variance of the other low in early 2020, or are we fudging it?
No, I don't think I have to fudge this one. So if I look at the lowest point is it's a flat bottom.
Yeah.
Lowest point is August 16 at 4,600. And then the COVID coffee is 4,797, so that's within 8%.
Yeah.
Yeah, so it really was only iron ore that we had to fudge. Everything else is is playing out using 3-point trend lines. But just wanted to call out that. So maybe during the week before we talk again, copper crosses and we're out. But obviously we'll put something out on Facebook and in a stock journal for that one on the website. Gold is getting close as well, Cam.
Oh my, what is going on, Tony?
Well, all these things have had great runs since the COVID cough. It's what markets do. They don't go up forever.
What gold are we looking at? Futures or XAU underscore?
Yeah, so XAU underscore is what I'm using.
Gold spot multi. Which
is also in US dollars. So, excuse me. So this has got a current price of $1,746 US dollars per ton. And the sell price is at 16.31, 16.40. So it's about $100 away from its sell price. So it's getting pretty close. I think all it would take is either a bit of a drop in the gold price or we scroll forward a month and we're probably going to hit that sell line for gold.
Yeah, right.
Again, without fudging. So I'm just going to call that one out there as well. And I think we're starting to see that reflected in the gold price, or the gold stocks dropped 2 or 3% today.
Yeah. Is that like Kingrose Mining?
Yeah, Kingrose would be one of them, but I think they all did. All of mine. If I have a look at Ramelius, it's down 6% today, 5.57% today.
Okay.
So a bit of prediction going on in the share prices for gold miners, I think. I'm prepared to wait until we cross, but it's coming up, I think.
Right. Right.
As good as I can tell. But all the other ones are good. So nickel, aluminium are good. Actually, platinum is a sell, which is, if anyone's holding Zimplats, they might want to have a look at the platinum price.
Zim goes splat again, huh?
Yeah, that's right, it might. So, again, platinum's had a really good run. If I go back into my advanced graphing page and call up platinum in the commodities tab. Platinum physical is XPT underscore in Stock Doctor if you want to have a look at it, if you're a Zimplats holder, and it's cross.
Yeah, it's really dropped off, isn't it?
Yeah, from $1,200, again, I think this is per ton, down to $979, and that's crossed the sell line.
Okay. How is our portfolio
So we're sort of seeing all these
doing?
commodities start to, they've done really well. Sometimes they've tripled from COVID and they're starting to come back to earth now.
Right. Speaking of coming back down to earth, our portfolio for this financial year is almost neck and neck with the ASX 200.
Yeah, well, I'm not surprised. We're overweight FMG, GRR, gold stocks, so they're all starting to turn back again. Right.
Back at the end of July, we were killing it against the ASX. We were 11% up versus 1.7% up. Now we're up a little shy of 5% versus the All Ords 3.2.
Yeah, right. Well, I'm hoping that we're getting the timing right to get out of these commodity stocks. We should, kind of following the logic, and that we'll avoid any more losses in iron ore at least. Perhaps copper and perhaps gold as we rotate out.
Just pointing out for listeners, though, it's a big decline, but our goal is to do double the All Ords, so 3 to 6, not 2 to 10. So we were shooting the moon back at the end of July with our performance back then.
Yeah, and that's also in the back of my mind, Cam. Last year on the market was the biggest market rise ever for Australia, so I can't see that happening 2 years in a row. So that's also.
Rudy says we're heading into a new bull market, Tony.
I saw that. Well, Rudy doesn't own gold stocks or iron ore stocks, obviously, or oil stocks.
Just CSL.
Or copper.
I think it's just all CSL.
Yeah. Which makes AstraZeneca, which is going to become a non-event, I think, pretty soon. So.
Oh, really? They make AstraZeneca, really?
Yeah. So they were really good last year when they started. They were the only local producer of a vaccine, and then people started getting blood clots, and they're coming back now. The share price is back up now, but we've struggled there for a while.
Mm. All right. Well, what now,
Okay,
Tony? What are we going to talk about now?
Well, questions. So thanks for bearing with me during that discussion on the big rotation, the great rotation out of commodities. We'll I guess, implement that and pay close attention to some of those other commodity prices in the near future.
Before we get into that, you wanted everyone to email Rachel Waterhouse at the Australian Shareholders Association. She's the president, chairman.
She's the CEO designate, so she's coming in to replace the current CEO.
Right. I hope when you emailed her, you fixed her email address for her.
No, it bounced back for me too after you sent me a message this morning or last night.
So she sent out. She sent out a group email, like an email to all of the ASA subscribers talking about what her favourite investing podcasts were. We were not on the list, embarrassingly for her. And she said, email me what your favourite investing podcasts are. And so you and I both sent her an email saying, hey, we're ASA members and we've had Alison Harrington on recently and Phil, you've been on Phil Muscatello's show and Steve Mabb's been on our show. We should be at least on your radar. Thank you very much. But her email address that she put in the email was wrong. So if you want to email her, it's Rachel, Rachel .Waterhouse at asa.asn.au. Shoot her an email. Tell her to check out QAV if you wouldn't mind. Speaking of things that people have done for us recently, I want to thank A and MCL for the Apple review that came through this week. It was short and sweet, but did the job. Thank you, and Mickle. Speaking of good results, I don't want to take too much time because I want to get a few questions in. I know we're over an hour, but I saw in the Financial Review today they were saying that bank share prices since the COVID cough, Commonwealth Bank's up 80%, Westpac's up 70%, ANZ's up 85%, and the NAB is up 77%.
Yeah.
I know that you talked a lot coming out of COVID about wanting to fudge the banks because they were sort of on the lower end of the scorecard, I think, at the time.
Well, no, they came onto the scorecard and had quite strong results and the numbers really stacked up, but the 3-point trend line hadn't breached its buy position, so I didn't buy them.
So you didn't buy them?
Unfortunately. Could have gone early, but didn't.
Yeah. So that's just the way the cookie crumbles?
Yeah, I could have fudged it and gone early, but I decided not to. And I've still made some good money out of CBA in particular. I've sort of gone in and out of the other ones.
Right.
And that's one of the issues I'm having at the moment is that our 3-point trend lines for a lot of stocks coming out of COVID is really steep.
Yeah.
And so they're kind of going up along the sell line.
Yeah.
Sometimes touching it, sometimes crossing it and then coming back. So it's a bit of uncharted territory for me in terms of 3-point sell lines for such a steep period in the market, really. But yeah.
Post-crash with rapid recovery.
Correct.
Yeah. It's unusual, right? That kind of a rapid MMT.
Oh, it's incredibly unusual.
Alan Kohler, I saw you last week, said it's not technically MMT, it just looks like MMT.
Oh, I think it is. I mean, we're through the looking glass, aren't we, really? Like, it looks like an economy, it walks like an economy, but it doesn't smell like an economy at the moment. It's just, you're on lockdown, we'll give you some JobKeeper. Well, I don't care if you think you're going to lose sales. Yeah, take some. That's great. Here's some cash.
Oh, if you're a church, doesn't matter. Take cash. Take millions and millions of dollars.
Billions, yeah. And you don't have to pay it back. It's fine. We're not even going to tell people who got the cash.
No,
that's fine. But look, guys, it was the Treasury forecast is going to cost 120 billion. It cost 60. Happy days.
Yeah,
that's great. Yeah.
And of course, imagine if Labor was in charge and did all of this. Oh. The Murdoch press would be out for blood.
Anyway, just like I've never seen that happen before. And the Reserve Bank just prints some more money and buys some more bonds and it all goes away. For now, anyway.
We did okay. Nonetheless, could have done better.
Could have done well.
You can always do better, but we did okay. We followed the rules. We did okay.
Yep. Absolutely.
All right. let's do. You got time? Can we do a couple of questions before we?
Yeah, sure.
Okay. How are you feeling? How's the COVID shot going? Are you? How's your AZ?
I'm good.
Yeah, good.
Yeah,
okay.
I'm good. Thanks.
Dave from Newey. Now, we had a couple of questions from Dave last week, and after we read them out, he sent me an email saying, on reflection, I realise they are way too long for listeners and you and Tony. Sorry about that. I have a tendency to waffle when I write, so I've shortened my last two questions below. And I think we'll give you one this week, Dave, because otherwise we won't get to any others. Dogs of QAV. Fiddling around with filters in Stock Doctor, I ended up with a screen for a 3-year price change with a healthy price to cash flow and price to NTA also included. I then stack ranked for biggest negative change and compared my latest QAV list. Sky Television NZ, code SKT, is on the QAV watch list and third worst on a 3-year price change. I dug a little deeper and there are a bunch of risks, plus they are not a buy on a 3PTL basis, but following Tony's example of putting his money where his mouth is with experiments, I've taken up a small position. I'll let you know how it progresses. Would be keen to hear Tony's thoughts and or if he's ever modelled a dogs type experiment. I think you have, right? You talked about that recently.
Yeah. So I used to use something similar. I used to use the 10 stocks that were the highest forecast dividend yield, which correlated pretty heavily to dogs of Dow because their share price was bombed out, but they were continuously paying dividends, and so their yield was up from a forecast point of view. That did well. It was above market, not QAV numbers, sort of 14-15%. And that's about, whenever I've gone back and looked at dogs of the Dow in terms of, going, usually every year someone publishes the results as a story in the newspaper. You can compare it, and it's been good, but again, it hasn't outperformed the market every year, and probably sort of around the sort of 13-14% over time.
Right.
So once I sort of got my hooks into QAV, I let that go.
Yeah, right. Okay.
I just want to say on SKT, it's got a good QAV score, but I'm a little uncertain about its 3-point trend line.
Let's have a look.
I'm just going to call it up. And also, too, it's a stock I've known for quite a while. I lived in New Zealand for 3 years, about 10 years ago, and it's been a declining. I've looked at it, a lot from 10 years ago, and probably every year since, and it's always scored well from a value perspective, but it's been in a falling knife situation for a heck of a long time now.
And it's been flatlining since the COVID cough, pretty much.
Yeah, and so I'm actually getting it as a sell at the moment.
Yeah, I wouldn't touch that with a barge pole. Not only because it's Sky, but look at that. That's a horrible flat line for 18 months. Yeah,
so I just wanted to point out, I don't think it's a buy at the moment. I've got it as a sell.
Well,
I've got a sell price of 18 cents and it's currently 16. But it's pretty hard to draw that sell line.
Yeah, Dave did say they're not a buy on a 3-point trend line basis, so we would agree with that. But good luck, Dave. Let us know how it goes.
It's great.
I hope you were
what he's doing.
Part of the beach party at Newey last week, Dave. That's all I hope. Duncan wanted to know, this is last week, how you draw a sell line on Rio.
Yeah, it's okay, so not too hard. What have I got? Rio. I'm trying to find it in my notes.
Well, it's L1 is August 2016 at 47.6, but it's about to fall off, like in a couple of weeks.
Right, so I've got L1 the same as that. L2 is COVID cough and a sell line of $98.68. Sell price, sorry. Right.
You wouldn't fudge this, seeing as it's about to fall off the end there?
No, we could. Let me have a look at it.
Don't know if it would make much difference, because then you'd have your new low point would be November 18, and it's pretty much the same, actually.
Yeah, the sell price would go down slightly.
Yeah, but not by much, a couple of bucks.
Yeah. Yep. I'm also thinking too, Cam, like with all these commodities, we should probably update the checklist and have a a go, no-go if the commodity's in a 3-point trend sell phase.
Right. Okay.
You know, for iron ore, for example, potentially copper and gold. Because what's going to happen is if we don't do that, Rio, Fortescue Metals, CIA, GRR, they're probably all going to be good scorers, but they'll be on the buy list when we don't necessarily want to buy them because their commodities are turning down.
Yeah, but if I look at Rio, same with FMG, it's a Josephine right now, so I wouldn't buy it anyway.
Right, okay. Yep. I think I should add that to the checklist, though. I'll just have to work out how to do that easily.
Okay. Is it a Josephine? Just put that Josephine column.
Well, we should add that, but I'm thinking also, too, about the underlying commodities.
Yeah, okay. Yeah, I need to put a Josephine in mine because I'm giving them negative sentiment when they're really not negative. They're positive, but it's just a Josephine. So I've been thinking about putting a Josephine column in mine. Or when I do yes or no, it'd be in the sentiment column. It'd be nice to have yes, no, Josephine. Poor Josephine. She's so confused. Yes, no.
It's like the original Facebook. It's like, you know, it's Josephine, yes, no, swipe left, swipe right.
Yeah.
We'll call them swipe lefts from now on.
Steve wanted to know sell lines for CBA and DSK.
Yeah, well, CBA is fairly obvious. Let me get my notes out. CBA, I've got L1 of September 20 at 63.61 and L2 February 21, 81.56, and the sell price is currently $100.55.
So you're flatlining the sell line here. Yeah, right.
Yeah. Yep.
So what did you get as the sell price again, sorry?
Today it's $100.55.
Right. Mine looks a bit higher, about 102, but okay. Good enough. Yeah, so it's going up. The share price is going up, but the sell line's racing to catch it.
Yeah, again, it's one of these ones coming out of COVID, isn't it? And CBA dropped below its sell line a couple of weeks ago, and I was going to sell it, but then it came back the next day, so I kept it.
Yeah. And DSK
is a hard one, but I'll just tell you my thinking on it. So DSK, I'll still use the 5. It's a new listing, but I'll still use the 5-year monthly chart.
Yeah. I may have bought this. I can't even remember. I know I looked at it. Oh, no, I decided
it was stock of the week a while ago.
Yeah, but it's a Josephine, I think. So I didn't. Well, it is a Josephine. No thinking about it. That's why I didn't buy it.
Yeah, stock just gone to sleep on me.
Oh, they must be running on the same platform as Superhero.
Yeah. Here we go. Okay, so there really is only one trough, on the DSK 5-year monthly, which is March 2021.
Yeah.
At a price of $294. So I ran a line from, you can do two things. I ran it, first of all, from the listing price.
Yeah.
But then there was a shoulder, I'll call it, like a half trough around January.
Yeah.
So I used that as L1.
Oh, you used the shoulder as L1.
Yeah. So where the line dropped below there. And that's at 221. And I drew the line up using that trough, which is there in, March?
Yeah.
And so I'm getting a sell, let's cross its sell line. I'm getting a sell price around about, well, it's going above the graph. But when it crossed, it would have been around 370.
Yeah. Okay.
Yeah. And the share price is 348. So that's how I draw it.
Yeah. All right. Well, I think we draw a line under it there. What do you think?
Yeah, I think so. We've covered a lot. We haven't done stock of the week, but we've talked about enough stocks there that people should get a flavour for it. We'll do a stock of the week next time.
Yeah.
I have plenty of other stuff to talk about, but it can wait.
Yeah. Okay.
Yeah.
Okay.
And sorry we didn't get to all the questions. We will attempt to do that next week.
Yeah.
It is reporting season too, people, so stay on top of that.
Yeah.
We have had some good reports from Corvus, from Credit Corp. A few others have come through. CBA comes through this week, so Yeah, stick close to the numbers.
Right. Thank you, TK. You had some music you wanted to talk about before we go?
Oh no, I just made some notes because you ask me every week what I've been listening to and watching and stuff.
Yeah.
I always get put on the spot and I think about it afterwards and go, oh, I should have said that. So
do you listen on Spotify?
No, I use Apple Music.
Oh, okay. I was going to say we should create a Tony's playlist, shared playlist on Spotify. Fat Pop. What's Fat Pop?
Paul Weller's new album.
Oh,
it's really good.
You're a big Paul Weller fan.
I am, yeah. So that's really good. And then he had another one came out I just got onto last night. So the Pet Shop Boys have done a cover of a couple of his singles, which are really good too.
Right.
Extended mixes, yeah.
And you want me to talk about oblique strategy cards briefly?
Yeah, you posted it on Facebook. What's going on there?
Yeah, so I've been wanting to get these for a long time. Brian Eno, I'm sure you know who Brian Eno is.
Yep.
He was the band he was in originally, Brian Ferry's band.
Roxy Music.
Roxy Music. He was the keyboardist for Roxy Music, and then he became a producer of Bowie's experimental stuff in the 70s, and he's produced millions of different people's albums.
Collaborates with David Bowie, with David Byrne.
Yeah, Byrne. Yeah, he's one of those guys who, if you need some deep thinking done on your sound and your direction, you go to Brian Eno. So in 1975, I think it was, he and a mate of his, a painter, Steve something, put together these things called oblique strategies cards for themselves originally, and then they ended up selling them. It was just a couple of hundred little cards with sort of ways of thinking outside the box to challenge themselves. If they got stuck on a problem, they'd just pull a random card out and it would have some sort of Zen-like saying on it. And then they would ask themselves, well, how could we apply that? So these are my cards that arrived. I finally bought them because I'm working on a similar card pack sort of thing with Peter Elliott. I'm trying to take a lot of Peter's stuff and turn it into cards that are more accessible than a 400-page book with 38 ideas every page. And I'm like, no one can read a book anymore. If we break them down into little cards that you can pull out that just make you think about something. So like if I pull Peter Schmidt was the name of the other guy. So if I pull out a random card, this one is, once the search is in progress, something will be found.
Well, that sounds like the iron ore price, doesn't it? We're trying to decide whether we sell Fortescue Metals Group.
So I tell you, like the first one I pulled out a couple of days ago when I got it was not building a wall but making a brick. And I thought, I tried to apply that to QAV as a service. I go, okay, so I started thinking about QAV in terms of bricks. What are all the components that we now deliver in QAV? And I got a list of about 20, and then I spoke to you and you added a few more. So there's like 23 different things at the moment that we're working on in QAV, individual service components. This thing started off as let's talk for once a week, an hour about a podcast, and it's turned into this thing that has lots of different facets. So then I started thinking about, okay, well, with each of these bricks, what's my vision for each of the bricks? If they were operating at 100% capacity, what would that look like? Can I rate where they are now? And what do I need to do to get each of them from where they are now to 100% capacity? What's the plan for each of the bricks? And that led me to thinking about our onboarding process. When somebody discovers QAV as a brand new listener, they know nothing about us. How do we take them from that to feeling proficient with QAV? How do we compress that amount of time as much as possible? And that led me to thinking, well, it's just a bit of a hot mess at the moment, the way that we do that, because it's growing sort of randomly, and people have, some of our early listeners and members gave us feedback. You need this. You should have a getting started guide, which became the Bible. You should have this. You should have that. Like when we started, we didn't even have the dummy portfolio. We didn't have the Bible. We didn't have, all of this stuff, which kind of has emerged gradually, but it's a bit of a mess. So I'm looking at hiring someone to come in and take a fresh look at it and say, okay, well, the best way to get someone from zero to hero would be through this set of steps and this process. Anyway, so that's what the oblique strategies cards are. It's just every morning. This is my exercise now. Before I do email or anything, I pull a card out and I sit down with pen and paper for half an hour. And it just prompts me to think in a different way about QAV than I would otherwise, right? Because you kind of get stuck in patterns of thinking over time, right? And it's very hard to think outside of your existing thinking. So, I'm excited. I love getting, being prompted to think differently about solving problems, and it doesn't always lead to anything. It may go nowhere, but if once a week it gives me a good idea about how we can make something better, then good.
Yeah. So Jenny's reaching out to a couple of people to do that process for you.
Oh, good.
The onboarding review.
Yeah. So I posted something on Facebook. A few people got back to me as well, so I've started some conversations. But yeah, good. If we can have half a dozen conversations with different people and then get some ideas and some quotes and stuff, that'd be great. Thanks.
Yep. Good.
Well, that's it from me this
that's a
week.
Long session.
Yeah, you must be exhausted. Sorry.
That's all right.
All right. Have a good week, mate. Stay safe.
You too.
In your little hidey hole up there. Cheers, mate.
Okay, mate.